General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, so see the midweek check-in. Anchor point. So thinking we could have a Wednesday midweek reversal here. Took out a lot of weekly highs with this level. And displays never returning, we filled the open range gap, but we didn't even attempt. This fair value gap I was looking at didn't hold, and we closed through 50% of it. So this could be the anchor, and this could be the next target. Wednesday anchor untested. The order block is the last straw. Yeah, if we break that, we gotta go bullish. Weekly buys. This thing is setting up for a bearish week on the price chart, but the storyline is bullish. Only way for price to really go bearish is if NFP is disastrous and we melt to Monday low. I'm soft biased due to NFP week. If we lean bullish, it's the all-time high story pushing us. If we lean bearish, it will be rebalancing at NFP. Shifts in framework hit rate, been good, not that many shots so far. Been a busy week, no case studies. See here, we're in week 1 of the new month. Previous month's range, we just rallied. Week 1 is usually the Judas. So it could be bearish if we just Judased up. But I'm thinking we're gonna make up for July being trash and August is gonna be super bullish. Week 1 NFP is usually the Judas for the monthly candle. We started off the month super bullish. It feels like the lag from there holding the market on Leopold. Yeah, pull Leopold. Expansion mitigation signals. Strong expansion just took out 4 weeks worth of previous week's highs. 3, 4. Let's see if they pair orders for a reversal. Decision quality, good. It's better when I take my time and don't overload my mind with different approaches. Narrative, framework accuracy, super bullish. Narrative has been easy. Experience success versus failure. No big success or failure this week. No case studies. And the day journal page. Framework, phase, and daily stance. Manipulation, we took previous day high and we're back in previous day's range. Daily stance is engaged, confidence level medium. Reason, we've seen the price delivery signature. Anchor point has not been confirmed, but we're thinking it's Wednesday. Is expansion playing out? Yes. Away from the anchor. Terminus hit today? Yes. I think that's as high as we go. The market story. Here's a rotational day rather than a broad sell-off. Dow only up 0.49%, closing at a record high. S&P down only 0.17%. Nasdaq down 0.83%. Healthcare, Disney, and other Dow companies held up, while expensive AI names were sold after earnings. SpaceX dropped 13% on concern about heavy AI spending, and AMD fell roughly 7%, despite forecasting strong AI-related demand. Eli Lilly gained 4.9%, Disney rose 3.6%, and healthcare gained about 1.6% as a sector. Forex factory news: U.S. labor data was weak. ADP private payrolls increased only 44,000, missing the 68,000 forecast and slowing from 95,000. This added concern to ahead of Friday's official job reports. So this could be also, something leaning us bearish. Services remained in expansion, but the details were mixed. Final service PMI was 54.6 versus the 53.6 expected. ISM services PMI was 54.1 versus 54.5 expected. Okay. Crude inventory 2.5 million barrels versus the 1.5 million draw. So the economy is not collapsing. Services are still above 50, but hiring is cooling while the inventory bill was bearish for oil demand expectations. Okay. China service PMI dropped, so they don't even need that much oil. While Euro area service came in slightly better than 51. UK service improved to 52. Spain was particularly strong at 58.3, but France remained slightly contractionary at 49.6. Dollar bonds on gold. The weak ADP number pushed September Fed hike expectations down approximately 55, but hawkish Fed speeches prevented a bigger move. The dollar index was modestly lower around 99.75. Your USD traded 1.15, UJ 157. Gold was standout today, roughly 4.5 up to 4,200 an ounce. The weaker dollar, softer yields, Middle East uncertainty, and continued demand for protection all helped. Oil was comparatively calm, with WTI near 75 and Brent around 80. The important contradiction is that the weak employment data was dovish, but the Fed officials stayed hawkish. Governor Lisa Cook said she's prepared to raise rates if inflation does not ease, while Kansas City Fed President Jeff Schmidt argued that tighter policy is needed because current policy may not be sufficiently restrictive. So I don't even think Kevin wants y'all talking. He don't want no guidance. But maybe the other people are trying to give guidance because they know how Kevin moving. And he moving kind of funny. Major earnings: Eli Lilly revenue jumped 48% to approximately $23 billion, driven mainly by, I ain't even gonna say that. Lilly raised its full-year forecast and shares gained nearly 5%. This was one of the strongest large cap reports of the day, I bet. But we still didn't really rally with Eli Lilly. Disney adjusted EPS was 2.06 beat to 1.88. Revenue reached $25 billion, slightly below consistent. But Parks and streaming profitability and the success of Toy Story 5 supported the stock. Yeah, without that, I don't see them being successful. Disney gained approximately 3.6. Spotify revenue increased 34% to $3.58 billion with 30% growth in GMV. Revenue growth, profit, and free cash flow. Management guided for the low 30% revenue growth next quarter, and shares surged around 17 to 18%. That swing trade every year for Shopify is looking better. Uber gross bookings rose to 58 billion, reached 14 billion, and non-whatever GAAP EPS was 0.81. The quarter itself was strong, but the next quarter profit took out Outlook was viewed slightly soft, sending shares down. Okay, CBS revenue rose 7.3% to 106 billion. Adjusted EPS reached 2.58. The full-year adjusted EPS guidance was raised 7.90 to 18. However, shares fell 5% because investors focused on possible 2027 reimbursed pharmacy benefit pressures. Okay, after hours, DoorDash marketplace order value increased 36% to 33 billion and adjusted EBITDA reached 914 million, both above expectations. Third quarter guidance was strong. Shares were up about 1%. Motorola beat earnings, raised the full year outlook, and traded roughly 5%. Western Digital revenue rose 44% to 3.75 billion and earnings beat expectation, but shares fell sharply after hours because expectations were already extremely high. That's one of them, like AMD. SanDisk reported major earnings revenue beat, but in September quarter revenue midpoint was slightly below Wall Street elevator forecast, sending the stock down 5%. September quarter revenue midpoint was slightly below Wall Street. Okay. Major headline driving everything. Markets continue to react to reports of progress towards the Iran-Oman agreement involving the Strait of Hormuz. Hopes of improved shipping across supported the Dow and helped contain oil prices. But investors remain cautious because the details would give Tehran considerable control over Gulf shipping. Let's see. What matters next? Thursday brings unemployment, productivity, and unit labor costs. The larger risk event is Friday, July employment report with forest factories showing expectations of approximately non-farm payrolls 85, unemployment 4.2, average hourly earnings 0.3. After today's week ADP report, Friday payroll number has become more important for the dollar, treasury yields, gold, and Nasdaq. Okay, so Wednesday was Dow Healthcare strength versus Nasdaq AI weakness. Weak hiring supported bonds and gold, but hawkish Fed commentary limited the dovish reaction. The market is now waiting for Friday employment report to decide whether the weak ADP number was real warning or just noise. So we really could chop tomorrow just based on that. Okay, let's do it. Daily logs, Nasdaq on the daily. Target hit. We didn't really expand too much in this candle, but I'm still looking at 50% in this candle's low for a target for tomorrow. Nice rate on the 20-day if the high. So that's the 20-day lined up perfect. Then we got the H1. So possible anchor. The order block created by the rate is my line in the sand. We break mean threshold of that H1 OB. I won't look for sales. We are in premium. If we run the buy side liquidity and reject the order block, I like the risk reward for a shot or a short position to target Tuesday low. N15 basically inverted this because we kind of closed it. We could reuse it. Maybe we'll reuse it for sales if we come up and come back down. It's still low resistance liquidity run to the downside for the bull case if we respect 50% of Monday, Tuesday range. I think we can get buys. Right now we're in a premium, so we should be looking for discount pricing. 50% and below, I think we buy back up. Okay, SPX on the daily. Rebalance objective will be the old all-time high. Beautiful, we have accumulation. Next candle is manipulation. I think we go lower, at least 50% of Tuesday candle. There we go. Basically the same thing. I like EQ with Tuesday for target sales from the OB will be ideal for the buy case. I think EQ is good enough. The ideal sell target will be Tuesday's low. on the M15. I've been noticing those highs. The highs and low today being the opening 9:30, then it just goes kind of one side of the day. Be aware NFP is Friday, so we can chop all day. Thursday, base hit target is EQ. On Tuesday, if that holds, then we go higher. Looking at the stock charts, yeah, it is crazy how we set on that 77.6. But we got this new day opening gap down here. Looks interesting. NVIDIA, this rejection here makes me think it's not like it needs to slow down. So maybe we can come back in here and chill before we go back up. I don't think we really sell off. All those earnings are doing good. The candle's just not as strong. This was the strongest candle. It's that Monday. Yeah. Then gold finally started. Yesterday was born. Today got the run, break, respect to the daily volume imbalance. Looking to see if we come back to this wick zone, we can buy up. Today was an engagement day on gold. This is the loss, and then 2 break evens. So it's a little late to the party. I should have got in here in order to manage better. Like right around here wasn't ideal trade location. Went for the buys on gold. I got 1 loss and 2 break evens. Did I follow the plan? Yes. If not, what caused it? I stayed with the plan. What did I do well? I picked the right asset because NAS and ES was boo-boo today. What will I do differently next time? Nothing. Did the framework play out? Yes. What did I learn about pattern? Wednesday midweek is timing the bad news. What will I catch for? What will I watch for tomorrow? Just chop before NFP. I don't think it's no major earnings tomorrow. All right, that's that on that. Let me add this to the Telegram, and y'all have a good day. Peace.